Blackstone defaults on $562 million commercial mortgage-backed securities as it keeps blocking investor withdrawals from $71 billion real estate investment trust. What is going on, guys? Brandon here. This is a story we've been watching now for a few months, and this is the really the back end of like a lot of those easy cash companies like Zillow, Open Door, Purple Bricks, whatever, all these companies that were paying, trying to do cash for homes, things like that over the last couple of years, and just completely fell apart. Everyone shut their doors because they couldn't do it. I was in that space. I was not a part of any of that garbage. I was buying homes myself and renovating them and then refinancing them and renting them out. And I have a real estate company that does that. We're not doing anything right now because we stopped a while back, a year or so ago, because things are crazy. They're nuts. We don't need to be acquiring stuff when there's homes that they just make no sense. The prices are through the roof, and quite honestly, there's not a lot of people hurting. Even though there's a lot of data, this is what's really interesting about the market. The market is giving us all kinds of mixed signals, and this is what's happening when you break the currency. Excuse me, and you have interest rates going all over the place because we talked to so many people and my team and many people weren't hurting because the government was subsidizing their living in every way possible, whether it was Section 8, whether it was welfare type payments, whether it was food stamps, whether it was help with utilities and things like that. This is not a debate of whether those things should be done or not. That's a video for a different day. What I'm telling you is that what we saw on the ground, especially here in Michigan, in Metro Detroit area, is that people were getting helped all the time. I mean, we would go to people that were, for all intents and purposes, really hurting actually on the inside, but they wanted full retail, what Zillow had, give me what Zillow has, and they think it was worth more. So they clearly weren't hurting on the outside. They might have had real issues deep inside internally, just their core financial situation, things like that, and they're going to have problems in the next few years here. But not at the moment. They were being propped up by all this easy, cheap credit, and this is the likes of Blackstone facilitating these things, BlackRock. So I wanted to give you a local example, and then also, and we're talking about the big boys now. So we got out a few years ago because we were like, this is ridiculous. This is insane. We're swimming upstream. We're spending all kinds of time, energy, and cash trying to just find one person that needs our help. And not many people did because the government was subsidizing all of it. So the government's in bed with these companies and the government's subsidizing and buying up themselves, right? So you have these commercial guys that are coming in with unlimited cash because they're using mom and dad's 401k money, their pension money, all that. And they get to use unlimited cash and then also currency printed by the government to just come in and buy people up at 10%, 20%, 30% over average value, fair market value of the home. And you have nothing you can do. I mean, as just a mom and pop or just a normal person, normal Joe, you need to buy a good deal. You make money when you buy. This goes for stocks. This goes for Bitcoin. This goes for real estate. You make money when you buy, not when you sell. That means you have to get a good deal. And when the deals don't make sense, only the Klaus Schwab firms, Blackstone, BlackRock, all these different asset managers get to come in with unlimited cash. Again, just cash that's funneled in every single day from people's paychecks, 401ks, yada, yada, yada. This is what you're fighting against. So you're fighting against this cheap currency, and these guys get to borrow at 0%, 1% financing, where we have to borrow at 4, 5, 6, 7, 8% or more. Some people might be using hard money lenders, but we're doing it 4, 5, 6, 7, 8%, and these guys get 1% financing, or less, maybe 2% at most if they are getting lazy. So this is the crux of the issue that's going on here, and it's all crumbling because the rates are moving up. As we've showed many times, and we show this in our market updates, so go check our market updates out every single day. We do a quick 5 or 10 minute market update every single day. What's going on? Look at the U.S. 10-year Treasury, 4.1% almost. So the rates keep climbing here. As we've seen, I'll back out to the 50-year. It's these trends down. This is what's aided all the market going up. So people think they've been getting ahead in life by being in the stock market. No, you've been keeping up with the currency printing. You've just been hedging in real estate or in stocks. This trend downward is what has boosted the likes of Warren Buffett since 1980, 42 years. Boosted every portfolio, asset manager, even guys that I think are very good. The Steven Schwartzmans, but the Ray Dalios, the Stan Druckenmillers, the Warren Buffetts. These guys just saw it. They understood the Fed put. They understood, we're in an environment where the rates are trending downward, and meaning the bonds are being bought up by the Fed. This is a game being played, and very few people actually understood this game. And this is why the wealthy get wealthier, and the average person, 99%, have no idea because they don't understand the dollar is debt.